My name is George Lesher, President of Cogite Incorporated. Thank you for attending. Most of you know me, but thank you for attending today's topic on benefits. So we're going to be looking closely at how ProFund accounting works with benefits and calculates and helps you can calculate benefits automated instead of doing it, painfully by hand. Again, we start out by letting you know our next training will be July 21st on the topic in question will be on the financials. So Paul's going to go through and talk about how to set up a financial, run a financial, and how to work with the new financial screens that we've done. All right. So let's just kind of cover what we consider a benefit, for most places. I mean, I'm assuming you all know what a benefit is, but we're just going to cover it to make sure. They're they're usually employee compensation that goes beyond just basic payment or salary. They always have a dollar value assigned to them, that the employer is going to be, that it costs the employer to provide this benefit. And those dollar values then, again, different benefits, different types of benefits have different financial impact on employees. And some of them need to be taxed in a certain way, and some of them don't. So it's important that you before you go to work with a benefit within Cogite, you understand what are the tax requirements for the kind of benefit you're adding. So that way we don't have a mixed match of deferred, exempt, and we're double deferring, double exempting, and things like that, which is pretty easy to do. So it's important to kind of be clear on before you get into it, what is this benefit? And how is it supposed to be taxed? Now, the other part of it is also important to do right from the get-go is to know how is this benefit supposed to be reported on the W-2 and the 941 so that we're complying within the IRS regulation form. So there's just a lot to think about before getting one set up. But once you have all of that information kind of put together, setting up a benefit, isn't that hard to do. There's some tedious points to it, but once those are done, then calculating that benefit on every payroll or every one payroll per month is usually not that difficult to do. So from the perspective of ProFund accounting, looking at it and how we deal with benefits, right now benefits are processed when you do a payroll calculation. So what that means is, your benefit maybe if you're going to be doing it every pay cycle, it could be 27 or 28, depending on the year, payrolls in the year. So you want to make sure that your benefits are accessed correctly with the right dollar amount. What a benefit does during the processing is it will add money to your employee's pay in the form of an actual payroll journal entry. Now, this payroll journal entry we do is marked with our standard FICA Medicare match payroll journal. So you'll see that, and I'll show you that when we run our example today to kind of show you what kind of entries are being made. Now, optionally, and generally this is true, but it's also an optional. We can have the benefit remove that same dollar amount from the employee's pay via a deduction. So it's not, again, we can give if the benefit is to give the employee, $50 for something so that it's taxed, and then we take that $50 away, we can certainly do that pretty easily. Now, there's a couple caveats we have during the payroll that we came across. So for a benefit to be processed for the employee, you have to have some kind of other earnings for that employee for it to activate. So in other words, if this employee was on leave or something, we are not going to process a benefit calculation for them because they had no earnings. So they have to have some kind of other earnings, either regular overtime, vacation, sick, doesn't really matter. Just some other earnings has to be a value for that employee to be considered for the benefit calculation in the way we process. And then the way we turn on a benefit is going to be by selecting the deduction code that the benefit is tied to. So when we set this up, we want to be really clear on making sure we have unique and independent deduction codes. And I'll cover that here in just a second on the next slide. So benefits for an employer when they're setting it up, there's three pieces to the benefit or three parts. There's a payroll type that's used for adding the payroll to the employee, like we said directly. There's a deduction type, which would take the money away from the employee. And then there's this new thing called a benefit type that we're talking about. And that benefit type is kind of what ties it all together, as well as help indicate how much pay the employer or the employer is putting towards the benefit for this employee. So let's just cover them, one at a time. So if we look at a payroll type, the payroll type indicates that the benefit is supposed to increase the taxable wages. So is this payroll type a taxable or non-taxable payroll type? That's pretty much the primary use. And also, it will set if there is special, like if this was a dependent care benefit, it can set what type the wage is supposed to fall in as far as the categories on the 941 and the W-2. But generally, it's going to be, benefits end up in the wages, tips, and other section of payroll of the W-2. But there's plenty of examples where it's got another odd value. The deduction code is what's going to remove that benefit amount and set the proper W-2 and other reporting data, like is this box 14, box 12? Does it have some other report value on the W-2? Again, these are where these things are kind of maintained and set up. But once they're set up, it's you don't have to come back to it generally once you have it correctly identified. And then finally, the benefit code is kind of where you set the percentage. The benefit code has a percentage calculation based on the taxable wages and or a flat amount. So if the benefit is supposed to be like a flat $65 or whatever, you can certainly have that be added. That can be taxable. But if it's also a percentage of how much earnings he has, like a retirement benefit that you're matching or something, you can certainly put that percentage in. And when you set it up at the benefit code, that's kind of the galactic setting that's everybody's going to use. So we don't have to set it on every employee. We just say, okay, our general benefit is adding 2% to somebody's pay of their pay to their retirement. Or there's a flat amount. We're adding 2% plus $5 again per payroll. Again, remember, this is always, you got to think of this as per payroll if you're going to be calculating the benefit for every payroll, or if it's monthly where you have the first of the month kind of set up. So you got to kind of remember what kind of order and settings you have on these things to make sure that you don't over benefit, you don't over specify a benefit for somebody. So when you're setting these three parts up, we strongly suggest you use a very similar three-character code for all three parts, or something that's kind of related so that it's easy to tell this deduction code really is for this benefit. This pay type is really for this benefit. And it's not confusing as we look at some of the other reports that don't really have the tie for it. Benefits for the employee is pretty straightforward because basically what we need to set up there is we need to add the deduction code that the benefit has to the employee, make sure it's set to active. And this is where you can change the W-2 reporting values if you need to on the employee, but generally we just leave them, kind of set the way they're normally. You don't want to override it. And then you also need to add the benefit code to the employee and set that to active. And benefits, again, after you add the benefit code to the employee, you can set up and change how much that benefit is used for that one employee if it's different from the global amount. So when you first set up a benefit, you say, hey, this is 2%. Well, maybe you have an executive that's supposed to get 4% of his pay for the same benefit. So you can change it for that executive to just be 4%. You don't have to add a separate benefit. Provided that it's all getting reported to the same the same kind of location. So if it's like a MERS calculation or something like that, your deduction code will have the MERS value set, but you won't be, but you might have different plans for the different employees. So you'd have to have a separate benefit for each of the employees. And it sounds like a lot, but it really, when you get down to it, it's not that bad setup for it. And it's got a lot of flexibility to it. All right, so we're going to walk through a quick example of benefits. we're going to do an auto allowance for personal use of a vehicle. And, when I researched this, it looks like most auto allowances are considered as a taxable wage to the employee. So we want to set the pay type as taxable to make sure that the tax is calculated correctly by the IRS and by our software, but yet the employee doesn't get the benefit as a true dollar in his net amount. So we'll be making sure that we take away that dollar amount that we add. So our example, we've estimated that the value for the benefit is just a flat amount of $75. It's not a percentage of pay. It is simply just $75 each pay is what he needs to get taxed. He needs to pay the FICA, Medicare, state and federal tax on that $75. So we're going to create the three parts and we're going to name them AUT for auto allowance. Our pay code will be set up and will be marked as taxable for the account. The deduction code will be marked as AUT and the calc type is set to 27. And we'll make sure that the W-2 info, box 14 with the word auto, to show on his W-2s how much money at the end of the year was marked for auto. And then the benefit, we're going to make a benefit called AUT that will link the other two parts and set the flat amount to $75. Okay. And then we'll add the deduction codes to the employees that are supposed to get it, and I'll show an override on it. So let's quickly flip to that. Come over here to ProFund. Okay, so if I come in here, we come into deduction types, and we come into our first deduction type, which is set to auto allowance. So here's I set up the auto allowance, box 14, the code we're going to give it as auto, and we're going to give it the calc type 27. Now, the benefit calc type deduction says, whatever I add with this benefit code, I want to take it away with this deduction code. So whatever, when the benefit is adding money to the employee, we're going to take the exact same amount of money away from it. Now we're making it payable to self, which is the, municipality. You can leave that blank if you just want to do the things by hand, but right now we have a way that you can now, reference an actual payment employee and make it say that you're just doing a voucher only, so it doesn't generate a check or anything, but it still has the linkage in other places for you to see this payment, and you can kind of collect that payment together in a better reporting. But for right now, this is our auto deduction code. So then we're going to also look at the pay type, and the pay type that we set up was AUT for auto allowance. And the other thing I forgot to mention is pay types have to have an account number assigned to them, because otherwise we don't know in the benefit when we're posting the employee's wages or whatever, we don't have what account number it's supposed to go to. So when you're setting it up, make sure your pay type that you're using for your benefit has a default account number set up. And you notice here we have payroll factor. We don't do anything to the pay other than make it taxable. And technically, MERS exempt might want to be checked because this pay really wouldn't be considered part of their retirement. This is a benefit for auto pieces, so we wouldn't want the MERS calculations to pick this up as wages. So this sets up the pay type. And so finally, we want to set up the benefit. So if I come into benefits, this is what I've got set up for the auto. So I named it AUT, just again to keep everything kind of similar on the, when you look at the pay stub, you'll see the AUTs. You'll see the word auto allowance that we have set up. And we're just putting in a flat amount of $75 to add. We're not doing a percentage of his gross earnings. Or his taxable gross earnings. We are just basically setting up a straight $75 to add to this employee. So then we need to set up employees. So we're going to come into employee comp, and we're going to go to our first employee, which was Hammond, where I set up, you can see that I've added the deduction code, AUT, and made it active, and I don't change anything here. Just leave it, because the AUT is set up as a benefit deduction code, so it will take the right amount of money away. So I don't need to put anything in parameters. And then I also added it to Michaela, and here AUT, again, no changes for the deduction code. Then if I go to benefits, on Michaela. We basically added the AUT benefit, made it active. And here's where I can do override. So if percent, let's say, Hammond's car was $75, but for some reason, Michaela's car is supposed to be, $90. We can put 90 in here, save that. And then when we calculate, her amount will then be $90. And even the deduction code will take away $90. So we'll go ahead and run a calculation quick, for here. So then when you go into payroll calc, for that, I've made a little benefit training payroll type. So we're going to pick that. Going to click load. Yes, I know. And then we're going to load a group that I've set up, which was the first pay of the month. And you notice we have the deduction code AUT in that. I'm going to give it a starting check number of 777. And here we go. So we have AUT for auto allowances showing up. And we have, several other wonderful taxes that are taken out. I don't know. I mean, this is just, copy of Chippewa's database from 55 years ago. But basically, you get the idea. We're showing this to show really the auto allowance. And now if I don't pick this, then the benefit will not get calculated. So if you have like a second payroll, if you're just doing a monthly one for the auto allowance, then just make sure you move that over for any other calculations you do for that month, and then make sure you have it back. So again, if it's not in the list of deductions to calculate, the benefit will not happen. So let's just go ahead and quickly calculate. It doesn't take too long. I don't have a lot of data on it. So we got some people that don't have those calculated fine. All right, so let's go and look at what is going to happen when you go to your reports and you bring up your PR journal report. All right, so my payroll is the benefit training payroll. We just run the report. And I look at Hammond and I see the $75 was added to Hammond for his auto allowance. And if I come down here, I see that $75 was taken away from his auto allowance. And if you want to go back onto the video, you can look. You can see that the FICA and Medicare and state and federal all included this $75 in earnings, but yet his final net pay did not, because we took it away here as an auto allowance. So that's how it will show up, on his. And so now if we look at, okay, so here's the thing. I put somebody in and they don't have any pay. So the other person I was doing comp package for was Michaela at 05. So let's go back to that report and see if she has any pay on that report. And she didn't have any pay, so she did not have the deduction code calculated. So I can uncalculate and we'll add it to Louise Rice, and we'll see what if we change the amount there. I thought I had her in here, but evidently I don't. Okay, so Rice Louise. So let's go ahead and do that. So we will go to Louise. We will first go to the deduction codes. We will say new. We will add AUT, save it, and then we will run to the benefits. We will add AUT and her amount. We're going to override it, make it $90. All right, so we will uncalculate deductions, and then we will calculate deductions. And then we will go to, oh, I must have closed the report. Then we'll go to the PR journal, run the report, and then we will see that she got $90. And we go to Rice, Louise, and, ooh, 75. I was wrong. Okay, let me re-verify that, make sure I got it right, because I may have forgotten to hit save. It's supposed to work that way. So I go to employee comp. I go to Louise, AUT, benefits, AUT. I see $90. What didn't get changed? Did I saved it? It says 90. Am I looking at the right person? Hang on. Oh, I'm looking at Hammond. Okay. Yep, she got $90. You know, look at the wrong person. But again, you'll also see that all the other calculations are based on the additional $90 of taxable earnings added for the state, like Medicare and federal. All right. That is actually, believe it or not, all I really have for benefits. I'm going to go ahead and open it up for big old questions for anybody to ask anything they would like to ask. So you can either unmute yourself and ask, or you can send something in the chat. All right. I'm not seeing much. That doesn't mean there isn't something there.
No, I'm not seeing much either.
Okay. I didn't think, it's not that hard. Benefits isn't that tricky. You know what I could do is I can also show you the journal where we added those so you can kind of see what that's going to look like. So you can actually look at that journal in Payroll Post. And if I come here and I say open journals, it's going to be the one that doesn't have a description generally right at the top. And if I say okay, you'll see here's our AUT money that we added to the employee and the amount. After I get to the amount, oh, come on, it's here somewhere. So you can see the $75 we added for that person, and then she got 90. So it's not that hard to report on. You can look at it visually.
We did get a question.
Excellent. Is there other examples of benefits this is used for, or mainly auto allowances? Oh, sure. We can do, let's say, something that would be fun.
I
So,
covered MERS last week and using benefit for MERS.
okay.
So
So let's say they don't have MERS, but they have some other retirement. And they're doing, everybody gets 2% of their wages added and $5. Sound like a plan? So we'd want to go into payroll types. And because this is going to be a new payroll type, so we're going to come in and say new. Our code is going to be EXP for an example, but or we'll call it RET for retirement. Well, excuse my typing. I'm getting old. My fingers don't want to click right. Okay, retirement. I like it. Check name, we'll just call it RET to keep it simple. Retirement goes in wages, tips, and other. There is no FSLA type on it, and we just need an account number. So we're going to throw it into, it'll be something like a 517, 513 something, usually 513. See what we get here, 513. Yeah, they don't have something set up for it. So I'm just going to throw it in a consulting fees. It's, whatever account number you put it to. This is not taxable. This is not a rate. This is not MERS exempt. So this is just straight up an account. So we have it for there. So we'll save that. We will go into deduction types. We will add a new one. We will call it RET. Description, retirement, active. RET W2. This probably goes into box 12. We're going to say, nope, this would be, what is it, F, one of these guys. We'll call it, what the heck, we'll call it a 401k AA, just so you see, just so you can kind of get the idea. It's not an Mission Square retirement plan. It is not deferred. It is not exempt because the pay coming in is not taxable. So we're going to be paying this to, let's say we have somebody called, oh, I don't see a retirement one in here. So we're going to call it Therapeutics Midway. Why not? So the check will be made out to this company here. So we'll save that. And that is our deduction code. Then finally, we need to set up the benefit. And the benefit here would be a new benefit, RET, description, retirement. I'm not going to type it out because I can't do it. The deduction code we're doing is RET for retirement. The payroll type we're doing is R. Now I see why I kind of say make it the same. It just keeps it straightforward. And we're going to do, well, let's say 2.754, okay, 2.74% of their pay. And we're going to also add $3 to it. Okay, so we're going to save that. So now we're going to pick, a couple employees to deal with. I'm going to keep the two that we had before because I know they got some pay. So we'll start with Hammond and his deductions. So we need to add for Hammond the RET deduction so he gets it. RET, there's no amount or percent. Did I pick the calc type on him? Let me make sure I got the right calc type for his deduction code. Sorry about that. Yeah, it's not RET is not adjustable straight dollars. It is supposed to be 27, the benefit deduction. Okay, so now our RET is correctly. We're back to employee comp package. We were on Carson. We added the retirement package for the deduction code, and then we need to add the benefit package for the benefits. So we'll say new. We will add him to the retirement. We're not going to override anything, so he's going to get the 275 plus $3. So again, so all we have to do is just save it. There's no reason to put any of that in here. And then we're going to go to not Michaela because she didn't get money, but to Rice and do the same thing. We'll go ahead and add the benefit since I'm here. Retirement, save, and then we need to go to deductions and add the retirement, save. Okay, so then we'll go ahead and uncalculate our payroll, and we will recalculate our payroll. Recalculation 777. We will load a group, first of the month. And now we also need to load retirement into that because it's not part of my group. So now I'm calculating both the auto allowance and the retirement. So we'll go ahead and calculate. And hopefully I still have the report up. Of course I don't. So payroll journal, we'll run the report. And we will look at what basically he's got on the report, what it will look like. So if we run the report, Hammond had retirement, got $22 added. And if you look down here, he got $22 taken away. Technically, this money then would go to whatever the retirement. So we'll look at a PR checks laser in a minute to see it should have gone to that. I can't remember, Maya, something like that. Anyways, so you see that one. And then if we go down to Julie Rice or Rice Louise, we will see that her total for retirement was $9.07 because she didn't have as much earnings. And again, the retirement was the same $9.07 taken away. Now, this money is not considered taxable earnings because we didn't make the pay type taxable, but let's just double check that because I want to make sure I didn't goof that up. So if I go to payroll types and we bring up the RET payroll type, it is not taxable. So again, when we added those earnings, it was considered non-taxable. We can look quickly at the payroll post journal again, and we will see the RET money is added for them for the dollars as earnings coming in. Obviously charged to the consulting fees account number. And theirs was $22. So it calculated the percentage and then it added $3 to it. You don't have to do an add. It's just, I wanted to kind of show that you can do both. It'll put both of it on there. If we want to then look at how the payroll reports would come out. So if I come back to payroll reports and we do a PR checks laser, we should see a check made out to the retirement company if you're doing it that way. You can also do a direct deposit. I'm just saying. Just click the right run, not you, but you. So if we go here, we go to the last page. The MIS2 is what I picked for the total. Oh, there it is. SERPTA. That's what I picked. So there's the retirement code. and the total amount between the two that were added up for the retirement made out a check to them. Now, if that company needs a direct, some kind of online thing, you can turn it into an online thing by changing the amount or the auto, what you pay it to. But I just wanted to show you this is what it would look like if you have one of the benefits. So you didn't have to calculate the percentage, and add it to every employee that has it. It does it for you. You don't have to do the, as far as the accounting side of it, you don't have to do anything for the payment. So what will happen when you move, the total amount of the payroll will include the payment, the wages for the benefits. So if you're moving money, if you have like you're working underneath your county, so you have to tell them the total amount, you'll be able to tell them the total amount. It's all the same. It doesn't, none of that has it done anything to change. Yeah, the main reason is that the benefit, somebody said, so the reason to use the benefit parameter is so we automatically create entries for the earnings. Yes, that's pretty much the main reason. If it's a flat amount, it's not as important because you can sometimes just get away with that by going into Payroll Post and making a journal and putting that in. But the issue will become the reporting of it as well. With a benefit, it has additional reporting that will tie it together with things. So you can run different reports to see the entries. And by forcing you or by having you create separate earning, pay types and benefit deduction types and benefit types that all have similar name, it's easy to report on to see, I want to see everything that's this. And so, as long as you don't cross that over and use it for something else. Let's see, did we get anything else? Annie thing is saying that they use it for the cash in lieu of an HSA. Yeah, you can use it for HSA. You can use it for a lot of things. If there's a employer amount that's added, that's usually a percentage or a flat amount to everybody, it's a great way to do that so you don't have to remember to post that for your payrolls. And we appreciate you attending and learning about benefits today.
You are now working smarter with ProFund Accounting. Thanks for watching. Be sure to like this video and subscribe to our channel for more content like this.